Hi, it's Lee, and welcome to the Tesla Economist. I'm currently thinking there's perhaps a 25 to even 30% chance that Tesla may recover to $300 this year. I know it may sound hard to believe right now, given that's nearly double the current stock price, but hear me out first. For starters, if I had learned anything, investing is unpredictable. Anything can happen. I mean, who would have thought even Bitcoin got back to $30,000 this year? No one can predict the future, especially when they're black swan events too. Now, if Tesla was to hit $300 this year, I don't think this is going to happen through huge profit increases, but more other circumstances. The market is forward-looking. Tesla is a growth company. If Tesla can show signs for more growth, then the market will revalue Tesla. If you recall, there were times when Tesla's PE ratio was north of 1,000. For me, ever since Battery Day, I've been pricing in Tesla's growth with 4680 cells, the potential profits they generate by reduced costs, and the ability to ramp up cell production to never-before-seen levels with relatively minimal capex. All the signs were pointing very profitable. But I don't think we'll see those profits anytime that soon. There is the chance of FSD being solved, but Elon has little credibility on the target these days. However, the videos we see are compelling, and Tesla really is leaps and bounds further ahead than anyone else when it comes to that technology on a scalable, affordable level. But even if it is solved this year, the profits won't start pouring in overnight either. Right now, a lot of investors have hope with the energy side of the business, and it is growing fast. Also, the price of a megapack compared to the cost of the batteries implies a potentially high profit margin. But again, these profits aren't going to be making a noticeable difference until Lathrop and Shanghai megapack factories are ramped. Then we have the Gen 3 vehicle, but we won't start seeing these come off the production line in any decent quantity until likely 2025. Similar to Cybertruck. If we're lucky, next year that will hit high volume production, but it's not going to be bringing in any profit in the meantime, whilst in low quantity. In other words, Tesla is not going to be overly profitable this year, especially if prices are lowered again. Which means the only way for the valuation to hit 300 is if the PE ratio changes. It's possible though. Sentiment is fickle and can change like that. It just takes something and then the market starts believing in all these things I mentioned above and how it's Tesla. They will eventually pull it off and it will be amazing. It's Tesla with these amazing engineers and Elon Musk, this incredible visionary. It's like the market just needs a reminder sometimes. It could be anything. Perhaps when the Model 3 Highland launches, demand will return. The same for the Model Y Juniper. But the Model Y currently is the best-selling vehicle in Europe. And when you compare it to the Toyota Corolla, well, bear in mind, the Corolla is a model with consolidated variants, like a sedan, hatchback, crossover, etc. And with all different various engine types, hybrid, diesel, gasoline. The Model Ys are all the same variant, with just two options, a rear-wheel drive and an all-wheel drive. And in the US, only an all-wheel drive. Just a side note, I think it would be prudent for Tesla to make the 4680 a lower cost rear-wheel drive for the US, as to likely increase demand further, more differentiation and a lower price point. We're seeing Chinese EV sales drop too. It's not just Tesla's demand, it's the aggregate demand of autos, not Tesla specific. And of course, during this time, Tesla has increased their supply, making it even more difficult. Also, a lot of people think that Tesla have dropped the price of the Model Y in the US from $68,000 to $50,000, as if it is a huge drop, which they literally did do. However, I don't think demand was ever that high when the Model Y was $68,000 anyway. Almost all orders were from the sub-$60,000 prices. And the Model Y is the best-selling vehicle in the US, aside from pickup trucks. But again, these pickup trucks have lots of different variants of the same model too. Given how little variety there is for the Model Y, it sells in huge numbers. This is a lot of demand. It must be the best-selling single variant of any vehicle in the world. It just feels hard to believe at the moment when the narrative is demand is drying up and Tesla are having to lower prices. Yet Tesla are selling a lot of this vehicle still. And when the sentiment changes, the same narratives can be inferred the opposite way. I mean, we see this continually. We get some news from Tesla and the bears see this as bad news. and the bulls infer it as good news. Everyone is just reacting to their own confirmation bias. It is incredibly difficult to be objective. Which is my point. The market is currently in a more bearish mode about Tesla, but the sentiment can change and the market can end up inferring all this data positively. The share price starts going up, then investors start getting FOMO and they start believing more. Oh my God, of course, Tesla are going to solve FSD eventually. I don't want to miss out on this investment. The macros can also affect this too. It sounds like the Fed are going to pause rates after this latest hike, and the market will eventually decide on how to interpret this, and might see even rate drops in the near future and start pricing that in. The market is forward-looking, and if it can predict rate drops, then that means the market will look favourably on stocks. On top of that, if rates are coming down, then cars become more affordable, which means Tesla's stock price will benefit more than the broad market, hence Tesla having such a high beta. We're seeing the competition like Ford still suffering massively when it comes to margins for their EVs. No one is close to Tesla. Oh, but BYD can make a $10,000 EV. Sure, but they can't make a $10,000 Tesla. If car buyers have $40,000 to $50,000 budget for a new car, then they tend to spend that much on a car. They aren't suddenly convinced to buy a $10,000 car just because it's that much cheaper. Price is not the only factor when it comes to buying a new car. People have a budget and then buy what is within their budget. Besides, the Model Y still outsold all other EVs in China too, despite its higher price point. It's clearly an incredibly popular vehicle, and Tesla just needs to get their costs down so they can lower prices enough to get even more demand. And remember, this is in a down economy when rates are high too, and Tesla just need to get their costs down so they can lower prices enough to get even more demand. And remember, this is in a down economy when rates are high too. Tesla can afford to take years to get the cost down to meet the market, and it's not like they aren't trying, as is the whole industry. And I'm not saying it's likely that Tesla will hit $300 this year, just saying it is a possibility. Anything can happen in the market, and especially anything with Tesla. And if not this year, then perhaps next year or the year after. And why stop at $300? Why not $500? And perhaps over the rest of the decade? With all sorts of potential events throughout this decade, there's a strong possibility of hitting $500 sometime. Or, of course, a possibility of even $2,000, as ARK suggests. Overly bullish by 2027, in my opinion, though. My point is, though, that Tesla don't have to deliver the profits in order to hit the valuation. Investors just need to believe the path is there and become confident that Tesla can achieve it. The Cybertruck launching, new factories being built, refreshed models, unit sales increasing, costs coming down, etc. Because I can't think of any other investment where the potential of FOMO can be this high. And once progress is seen in these other sides of the business, then there'll be more confidence in the potential robotaxi business, which, as Elon says, and the majority of us who run the numbers agree, that the numbers do get nutty. And this is partly the reason that so many Tesla investors say you need to wait until 2030, as the chances of many of these elements being achieved increases dramatically. But the market is forward-looking, and if it believes it's looking likely beforehand, then the stock will price itself accordingly. I mean, equally there is possibly the same chance of the price dropping to $100 too. But at the end of the day, it's all about Tesla's relative market share within the rest of the auto industry. And when the aggregate market recovers, Tesla will be left with a larger share than before. And during such a period, Tesla appeared to have the most chance of survival when compared to many of the other auto companies. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.